This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this StockBox interview.
Joining us today is Steve Kesler, the Executive Chairman at CleanTech Lithium. Steve, good to be talking to you for the first time. How are things?
Good. Progressing as usual.
Okay, good. Let's just get a snapshot, if we can, first of all, of where the company is, really. Depends how much you want to talk about the past, but really it's more important as a snapshot where we are today, I think.
Okay. We're a company that is developing lithium brine projects in Chile using renewable energy so that we can market what we call green lithium into the world markets. We listed on AIM March 2022. Since then, we've been very busy developing those assets. We've had drilling campaigns. We've declared a very significant lithium resource. We have a portfolio of projects, of which Laguna Verde is the most advanced project. We've had scoping studies with very robust economics on two of those projects. The most advanced, Laguna Verde, is in pre-feasibility study at the moment. That's due to complete in April, and we'll be putting the results out in April when we are putting our prospectus together to go for our ASX dual listing. Now, you say that why ASX? Our largest shareholder is Australian. It's Regal Funds. They have been very forceful with us, saying, look, the Australian market is where you really need to be. That's where there's a lot of deep pools of investors for the natural resource space, particularly the lithium space, where there's over 30 lithium companies listed there. And they believe that when the investors in Australia can compare what we have in Chile is producing battery-grade lithium carbonate in a green, sustainable way, compared to the hard rock miners of Australia, which are much higher cost and having to send their concentrate to China for processing, they'll be able to see that we are a very, very good investment, and they can see a rotation from the investment in hard rock to an investment in CleanTech Lithium in Australia. So that's where we are today.
Okay, good. No, that makes sense. So it's lithium brines in Chile there. As I understand, what I know about lithium brines is they're a lot more economical. There's not so much drilling involved, of course, with hard rock as there's less processing. But it's about getting the process right, isn't it? And you've done the scoping study, so you say that the economics are pretty robust. You're in PFS now, due in a couple of months. Just about a couple of months. So that's a big milestone for the company, isn't it? I mean, can you give a snapshot of what the scoping study suggested the economics were looking like?
Well, we finished the scoping study for Laguna Verde at the beginning of 2023. We were looking at capex in those monies of $400 million or so. Low operating costs at $4,000 a ton. That was delivering an IRR of over 40%. So very, very robust. That's after tax and after royalty. Now, clearly, there's been inflation since then. So we'll expect the capex to go up. Sure. We'll obviously relook at what the long-term forecast of lithium price is. It's low at the moment, but it must go up into the future.
Well, that's an interesting point. Okay, so lithium, of course, and the pricing. I mean, yes, we have seen it come off a little bit since the sort of the hype of the battery movement. Is lithium still a hot commodity to be chasing? You say there's a lot of interest over in Australia.
Lithium is a really fast-growing commodity. Its focus is the decarbonization of the world's economy. Every major company is looking to shift away from internal combustion engines to electrical vehicles. Mm-hmm. So the growth rate has been tremendous. If we just look at last year, the world had an increase in the purchase of electric vehicles. It went up by 25%. It's going gangbusters in China, up by 40% last year. Not so not so strong in the EU and United States, because the vehicles are still perceived as being a bit too expensive. But all the manufacturers are looking at getting those costs down. So in the long term, we have a very robust outlook for lithium. In the current couple of years, the supply-demand balance is pretty flat, a little bit of oversupply, as there were quite a number of new projects in Australia and Africa have come into production. So that's forced the price down. But today, 50% of the world's lithium production is operating at a loss. That's unsustainable. Most analysts project that the price needs to double in order to get the new mines which the world needs financed and into production to meet the demand growth for lithium. So it's been weak in this current last year, but the medium to long term, very, very strong.
Okay.
Electric vehicles is one thing. The other very large growth area for lithium batteries is battery energy storage, linked to renewable energy, solar and wind. When there's excess solar or wind, it needs to be stored and then discharged when the sun's not shining or the wind's not blowing. And there are people, the large Chinese battery manufacturer CATL, their chairman said they believe the demand for lithium for battery energy storage will outgrow that for electric vehicles. So we're expecting to see very, very large increases in demand for energy storage as well.
Okay, yeah. So you what you said there about sort of the current producers there, they're actually not making money at the current prices, but the demand is still showing strong fundamentals. So effectively, the price has to catch up because that's obviously not sustainable.
Yes, no, that's right. There's been a number of producers in China and Australia have put production in care and maintenance because they're just losing too much money.
Okay.
Probably, we're looking at a price from today, average $10,000 a ton. It needs to get to $20,000 a ton before banks will finance new production. So from today to when the new production is coming in a couple of years, the price will gradually strengthen. Absolutely certain.
Okay. And it's Laguna Verde that's the focus. Is it all hands to the deck at Laguna Verde for that PFS at the moment?
Yes, we've got two advanced projects, two exploration projects, but all the finance that we have available, we're putting to get Laguna Verde up and running as soon as possible. And the time scale of that is finish the PFS in April. We're looking at getting our operating contract into negotiation with government at the end of March. That's very important, because that gives us clarity that we will get an operating contract, and we'll be negotiating the final terms of that. ASX listing, we'll launch that in April. Aim to complete that in May.
Okay.
Our brokers have analyzed the market, and they believe, comparing to our current market capitalization compared to our peer group in Australia, we're valued only at 30 to 35% of our peer group in Australia. So there's much better valuation of companies in Australia than we're seeing on the AIM market today.
So just on the valuation, so you're currently around 10 million British pounds. So why do you think that is? Do you think that you've got to get through that PFS and show that, or is there concern in the market? Do you think about that OPEX that you talk about, how you might actually fund it? And do you think the ASX listing might help unlock some of the value?
Well, there's three major things. Is one, the lithium market, the price is down. If you look 2 years ago, it was $80,000 a ton. It's now $10,000 a ton. So every lithium company's share price has plummeted in that time. Then people want to see the project de-risked. And in Chile, there's two things. One is getting the operating contract from the government, because all lithium is reserved to the state, but they're giving out what they call special operating lithium contracts to the private sector to develop new production in Chile. That's coming in March, and they want to see what are the results of the PFS. Let's look at the technical and economic viability of the project. Get those de-risked, and then we'll see the price climb.
Right. Okay. Interesting. And so you get those things de-risked, exactly, and then does it then come down to almost like a play on the price of lithium?
Well, there's two things. One is the project itself, and people recognizing the quality of the project, that we're going to be a low-cost producer with geopolitical advantages, because we're going to be producing battery-grade lithium carbonate directly into the world market. Chile has a free trade agreement with the United States, good trading relationships with the EU. There's no need to send, like Australia has to do, concentrate to China for processing. The world wants to see a movement away from total domination of China in the supply chain. So people will look at our project. The second thing is lithium price. No, it's not going to stay at $10,000 a ton. So here we have, we're telling our potential new investors, we're at the bottom of the market. Now, the only way the price is going to go is up from here. And here we've got, with CleanTech Lithium, green sustainable production coming in at low cost.
Okay, well, thank you very much for giving us that snapshot and that information. Good to get those insights. All eyes will be on the, there's milestones coming up in March, as you say, that government operating contract, but also then, of course, the PFS. But for now, Steve Kesler from CleanTech Lithium, thank you for your time.
That's a pleasure, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.